Hello everyone, it's time for this week's market analysis. On this channel, we break down trading strategies and insights in a way that's easy to understand, all through chart analysis based on Dow theory. If you want to dive deeper into the methods we use, there's a link to an explanatory video in the description. Be sure to check it out. Let's get as good at technical analysis as a raccoon is at using its paws, crafty and quick. If you found this video helpful, please give it a thumbs up and subscribe to the channel. Now let's jump into this week's market. Let's take a look at the EURUSD chart. We'll start with this week's price action. This is the weekly chart. A bearish candlestick with wicks on both ends has formed, suggesting that while the recent upward momentum has paused, there's still a tug-of-war between buyers and sellers. At the weekly level, both upward and downward scenarios are possible, so let's break it down further using lower time frames. Next week, we'll be watching closely to see how long this pullback continues. Now let's move to the 1-hour chart. The yellow vertical line marks the beginning of the week. The market opened in a range. In last week's video, we pointed out that the 4-hour chart was already in a downtrend, and that unless price breaks above this green line, the uptrend won't resume. As you can see, price failed to break that level and turned downward instead. If you had entered a long position based on a lower time frame shift while using the 4-hour higher low as support, you should have exited at break even once the trend reversed. Let's quickly review this key point from last week. Even though the 4-hour chart hadn't broken the higher low yet, both highs and lows were already declining. Some traders might still have seen it as an uptrend, while others considered it a downtrend. This kind of situation calls for a flexible outlook and risk management that accounts for both possibilities. With this week's drop, the 4-hour chart has clearly broken its higher low, confirming a full downtrend under Dow theory. This means we now have a correctional downtrend on the 4-hour chart, moving against the weekly and daily uptrends. Let's revisit the weekly chart. We see this wave structure playing out. After breaking this resistance line, the weekly chart entered an uptrend under Dow theory. However, price formed a long upper wick, indicating a potential correction. That said, we are still in the high price area after a strong rally, and entering a new long position here would be risky. If you're aiming for safer trades, it's better to wait for a pullback to form before considering long entries. Next, the daily chart. We can see that the uptrend is still intact, and recent upward movement has been quite strong. The higher low remains at this level. As long as that level holds, the daily chart remains in an uptrend. This current decline looks like a healthy correction. If lower time frames show a bullish reversal at a key support level, that would offer a high probability buy setup. Let's keep an eye on where those reversals might occur. Moving on to the 4-hour chart. As mentioned earlier, the 4-hour higher low was broken, which confirms a downtrend under Dow theory. This is the current lower high. Also, the trend line has been broken, confirming that a deeper correction is underway. Watch to see whether this broken support line now acts as resistance. If price pushes back above it, we might get a return move. But unless it breaks the previous lower high, the downtrend continues. This structure allows us to draw a descending channel, which can help gauge the strength of selling pressure. Now for the 1-hour chart. Here, the higher low has been broken, confirming a downtrend. This is the current lower high. Since the 4-hour chart is also in a downtrend, if the 1-hour chart turns bearish again without breaking its own higher low, it could signal a strong continuation downward. Also, the former higher low level may now act as resistance. So let's keep an eye on that area as well. To summarize, the weekly and daily charts are still in an uptrend. The 4-hour and 1-hour charts are now in a downtrend. So we're looking at a multi-time frame situation where a short-term correction is unfolding within a longer-term uptrend. Let's talk about the scenarios ahead. First, the sell setup. As we discussed, both the 4-hour and 1-hour charts are in a downtrend. If the current lower highs hold and we see trend reversals on the 5-minute or 15-minute charts, we can consider short entries. The 4-hour downtrend line can also serve as a supporting factor for these trades. If price drops further from the current level, the 4-hour lower high will move down here. Then we'll look for short opportunities near that new level if lower time frames confirm a bearish shift. Now the buy setup. Since the weekly and daily charts remain bullish, we want to look for buying opportunities during the pullback. Using the Fibonacci retracement tool, we'll watch the 50% and 61.8% levels as key zones. If price reaches those zones and we see a bullish reversal on the lower timeframes, we may see the larger uptrend resume. Even if the market starts rising from the current level and the 4-hour chart turns bullish, keep in mind that we're still in the high price zone on the daily chart. So buying in this area requires extra caution. Did you find that helpful? If you did, please give this video a thumbs up and subscribe to the channel. Next week, let's be as skillful with technical analysis as a raccoon is with its paws, and trade with the same caution a raccoon shows in the wild. I wish you all successful trades. Best of luck.